Good morning, everybody. Welcome back to Schwab Coaching. It's our Wednesday edition of Trader Talk in today's market. I am your host, Kevin Horner. Another gorgeous morning in the Denver, Colorado area here today. I am pleased to be joined by my friend and fellow coach, Brent Moores. Good morning, Brent. How are things today for you, sir?
Things are starting off the day just fine here, Kevin. I'm glad to be on with you. I can't believe it's been a week already since I've been
I
on
know.
with you. So weeks are flying by, but I'm
Yes.
happy to be with you.
Yes, they are as we head towards the fall. Yesterday, the first day of September, from a trading perspective, Brent, wasn't
Ooh.
exactly what we were looking for, was it?
No, no, yesterday was a rough day. Well, it'll be interesting. We'll have to see if we continue that through today or not. I think jury's still out on that right now, but yesterday was a rough day on the markets. We'll take a look at that in just a minute. I guess we'll see.
Yes, we will. Brent, as usual, we're going to get down to business with a look at the charts. Obviously, we'll hit on some news points. Say hey to Ben Watson, everybody. He's in the chat for us. Make sure you're following the three of us, all of us available for you on X. We use our first and last name followed by the CS to indicate Charles Schwab. So Kevin Horner, CS, Brent Moores, CS, and Ben Watson, CS. We would all appreciate the follow there, everybody. And of course, if the show today meets with your expectations and what you're looking for from us, make sure you hit that thumbs up and subscribe to the Schwab YouTube coaching channel as well. Now, please keep in mind that our conversations here are exclusively for your information and education, meaning simply we do not make recommendations or endorse any particular strategy or approach to the market. Additionally, we discuss technical analysis quite a bit, but we encourage you to think of it in a complementary fashion rather than relying exclusively off technicals to base your decisions. Also, bear in mind, options carry a higher level of risk, are not appropriate for all investors. You do need to be approved in order to trade options here at Schwab. That is done on an account-to-account basis, and you'll want to be familiar with the characteristics and risks of standardized options prior to any investment there. If you are new and joining us, everybody, we go through a broad market top-down viewpoint. We start with the major indices. We also dive into some of the sectors that could be moving and, of course, some stocks in the news, all the while trying to keep you primed for what you might be looking at this week. Plenty to get to with you all, but as we often do, we're going to start with a look at the S&P 500, which did break down yesterday, Brent. I was talking yesterday about the potential to hold the tight range we'd been trading in over the last 2 weeks there, right around that 55.50 to 55.60 ledge. And boy, when we took that out yesterday, it got to be a pretty clear sell day, didn't it?
Yeah, that took it out in a big way. There's a lot of times we get to a support level and there's some ambiguity as to whether we're going to break it or not. But that one's a full candle below that, and so a couple things on this chart. Number one, we hit a high back in early July, and that the question was, we were looking at this. In fact, we saw this last week. The market kind of marched up there, then it showed lessening of momentum. The question was, is this going to kind of flag, go consolidate and then break through, or is this actually going to reject it? And well, yesterday was kind of a pretty good rejection to it. Another interesting thing is, look at where we are this morning here, opening up. We're right between the 20 and the 50-day moving average. So now, the day is young. We'll have to see if we get a bounce from here. But obviously, yesterday was a big day down. You can see that reflected in the RSI as well.
Yeah, we sure can. I had similar takeaways, of course, Brent. I don't think anyone's going to be surprised to hear that you and I are kind of on the same track when it comes to evaluating what happened here. We did hit the 50-day. We've got, and again, that low is consistent with essentially the top
Yes.
of this low after the gap, right? So that can create, as we often discuss, an area of support, certainly an area of note for us today. The breakdown in the RSI, not ideal, kind of supportive of the pullback here. But the 50-day might be quite important. And the confluence of the 50 and the 20 there, all at that same level, Brent, confluence really tells us quite a bit, doesn't it? I mean, it helps us to understand traders of differing time frames watching the same price level.
Yes, absolutely. When we talk about support levels and resistance levels, there's like there's a lot of different potential areas you can point to, because there's a lot of little places on the graph where a stock may have gone to, we have to kind of discriminate on those as to how strong they are. And so one way we discriminate is by judging them by how many times they have bounced off a certain level, or how many different signals are pointing to the same thing. And when we say the confluence, we're talking about, hey, if this low level matches up with the moving average, that's a confluence of two separate indicators that may be kind of saying the same thing in different ways. When we see that, it lends some credence to the notion to the idea that that is actually going to be a support level that may hold or break or whatever there. So, and of course, there's no guarantees on any of those, but when we look at that, that's just the kind of the standard procedure we use in technical analysis.
Yeah, that's about, again, we recognize technicals are far from perfect.
Yeah.
I like to say that technical analysis is an art, not a science, and it encourages us to be a little more broad in our assessments. Our man Ben likes to comment, I've heard him say many a time, that it's a kind of akin to the cheeseburger that Jimmy Buffett sings about, right? Not too particular, not too precise. Try to be a little bit more broad in your approach and give your levels a little more range opportunity, and that'll help us out. So that's one good takeaway, I think, as it relates here. Let's peek in on our bigger move. I mean, obviously, the move in the NASDAQ yesterday was a bit more pronounced than what we got out of the S&P. And we took down a major level here, of course, Brent. So remember the gap we were talking about with the SPX? Well, that was this gap here. And unfortunately, there was zero support. I mean, we may have had a 5-minute bar pause there. We went through it with expedition and then took out the 20-day. We are in a precarious spot, it would appear here on the NDX, Brent.
Well, we did break not only support level, we're down below. Remember those two moving averages I mentioned there? Well, we're below both of those. There's no question about those right now. And the reality is there's maybe not, I mean, probably some support down, I don't know, 1880-ish or somewhere in about 18, yeah, right around there, 1870.
Yeah.
Well, 18,700-ish level is probably our potential support level. Break below that, that's bad news, because then we're looking at the 200-day, we're looking at the July low. This is the NASDAQ, so it's moving. Yes, on the surface it does look, the movement tends to go the same direction as the S&P 500, but just magnify that. The NASDAQ is a higher beta instrument than the S&P 500. So when it goes down, this tends to drive the sell-off on the downside here. And likewise, when the market goes up, this tends to do better. But at this point, the market's going down. This is driving it down. We saw that yesterday in NVIDIA as well, in terms of how big that dropped yesterday. But yeah, we'll see. But I think we got that support level. We'll see if that holds today. We do have the JOLTS report coming out in not very long, 15 minutes or so, probably at this point. And that could push the market a little bit, and so we'll see.
Yeah, you're right. The semiconductors broke down pretty aggressively yesterday. We're going to get to those momentarily. Yes, we have the JOLTS report today. As Ben replied to a couple of comments in here, the JOLTS can be indicative of some price action today. Ben's point, perhaps that maybe Friday's report and the non-farm payrolls might have a bigger impact on things, but it's certainly worth keeping an eye on, because, Brent, as you and I were discussing pre-show today, the reminder is maybe that we're right back to a market in which news makes sense. And what I mean by that is we often see, Brent, that sometimes when we are talking about the potential for the Fed to intervene on things, the market takes bad news about the health of the economy as a positive, because the implication is that the Fed will take some sort of action. However, at this point in the cycle, where we have moved enough through to the point where we're talking about the potential for recession, and we're parsing every bit of detail we have on the economy to understand the health and strength of things. We're at a spot, evidently, when we talked about the report that came out yesterday, the ISM manufacturing, which kind of let us know that things might not be as healthy as expected. And there's a few other talking points that we may very well want to dive into here. What are your thoughts on this, Brent?
Yeah, so right now it seems bad news is bad news. I know that sounds like obvious, but sometimes in the market, as you mentioned, I won't belabor it, but you get some bad data and people view it as a sign that, oh, the Fed may cut interest rates or something like that's a good thing. Well, that's not really it is right now. Right now, the concern is recession. And there's different focus, points of focus in the market at different times. Do you know, for the better part of the last couple of years, the focus, it seems, has been on inflation. The concern has been inflation, and that has been driving the market. Maybe a little bit less of a concern on that front, and a little bit more on just economic health, economic activity in the market, perhaps driving the market right now. Not that inflation is unimportant, and it's not that those two aren't linked in some way either, but that does seem to be more the focus right now in the market is this economic activity. It seems that the Fed has helped to initiate a slowdown to a certain extent, which is kind of what we wanted in terms of trying to fix the inflation problem, but trying to make that soft landing, so to speak, that everybody talks about. That's the concern now, is this kind of getting to be kind of a little bit of a rougher landing than the soft landing. I guess we'll see on that.
We will. In fact, let's look a little bit at the RUT, the Russell 2000. We had a pretty healthy breakdown here as well, and yet we found potentially support with that 20 and 50 confluence, kind of similar to what we saw in the S&P and the NDX. Well, the S&P rather, not the NDX. And I had a question in here about the lines. Let me just answer it for you, Don. What we're looking at are the 20-day moving average in orange. The pink line is our 50-day moving average, and the blue line down below our 200-day moving average. I'll remind you all, these are simple moving averages. What that means is that they are applying an equal weight to every closing value that is calculated in that price action. And so what we're talking about with a 20-day, very simply, is the average closing price of the last 20 trading sessions, or I should say the last 19, incorporating today's price action on a last trade basis. So it's always making that calculation. It's a dynamic line that some traders will rely on. Traders in differing time frames. That's why we have a 20-day moving average, a 50-day moving average, a 200-day moving average. Hopefully that kind of helps to outline what we're looking at there. So it gives us an idea on trend analysis. And speaking of trend, Brent, we've spent a good portion of the last couple of months above that 2130 level, but we got thrown back to it pretty aggressively with yesterday's selling in the Russell here. It kind of lets us at least set our risk if we are looking at the Russell from an investment standpoint, perhaps.
Yeah, not much was unscathed from tomorrow's sell-off, but that's a pretty key level, that support level that we have here. That was an old resistance that we hit. Mm-hmm. We got our moving averages right there as well. And so, again, we'll see on this. This is small caps we're talking about. And I don't know. It's generally you can see the trend has been up on this longer term chart of the last, half year or so. But the Russell, for the most part, has lagged large caps. Well, we'll see. I don't know. Selling off now.
Yeah, we really don't. We really can't tell. Too early to know. But let's look at two of the other. One of the other things that we covered already that we think is kind of important, and that's the potential for rates. So if we bring it back to the rate change concept, we have the meeting coming on the 18th, about 2 weeks out from today. The knowledge that we're expecting, what we're looking at in terms of how traders are positioning right now, is a strong likelihood of only, and I say only, a 25 basis point cut. This is, Brent, where we talk about the possibility that the Fed's involvement by shifting to a 50 basis point cut, which is a 39% likelihood according to traders at the moment, that could be the signal that things are not as good in the economy as we had hoped. And that's the signal that concerns the broad market, I believe. Do you agree with that?
Absolutely, that's a signal that that is concerning the broad market right now. And so this is where we go back to, in the past, traders may view the prospect of a 50 basis point cut as a good thing. Wow, that's going to maybe pump the markets a little bit. But now they're going, well, that 50 basis point cut, the connotation of that is it means that, oh, the Fed is worried about the level of the drop off in economic activity as well. And 39% is not an insignificant percent. And so we'll see. I don't know what they're going to do. Obviously, the markets right now are pricing in, and it's not this is not a perfect measure of probabilities. This is just kind of what the market is pricing in right now. But right now they're pricing in a roughly 60% chance, and that's kind of what the Fed has signaled. But they've also said, well, it's data dependent and so on. And so, we'll see on that as well.
Which means more data will help us discern the next move, perhaps. But inevitably, traders are parsing every bit in an effort to get ahead of the Fed so that they can trade on that detail and that news. As Ben is pointing out for us, it's a great reminder. Yeah, this is a third-party application. This is not our website. So we're relying on the CME group here directly. We should also point out once more, these are not ways that things are going to go. Okay, this is how traders are trading the understanding of what the Fed is thinking. So there's no guarantee here we get a Fed cut at all, much less 50 basis points. So the reminder is, this is just how traders are positioning. You can use this to your benefit, perhaps one way or the other, but by no means is this locking us in to any guarantee of any kind. So please keep that in mind, everybody.
And one more thing on this tool here is at the tabs at the top, you can look at kind of future possibilities as well. Mm-hmm. So if you go to January, and you can see, and one thing to remind yourself is at the top of the graph, it says current target rate is 525 to 550. So that's where we are right now. Mm-hmm. So going to 425 to 450 would be 100 basis point cut, or a full 1% cut. Well, if this were to hold true, that seems like almost an unlikely possibility at this point. And but the market seems to be expecting, to a certain extent, a bigger cut than that 100 by the beginning of next year here. Mm-hmm. So that's another thing you can kind of consider, is not just the next rate cut, but future expectations on that. That's kind of an easing of the interest rate path that we've been seeing.
Yeah, a very good point, and certainly notable, especially when you see the significance discrepancy between where we are and maybe the expectation for where we could be in a mere 5 months. We should also point out, by the way, everybody, make sure you're checking our upcoming calendar. You can do this at schwab.com/events, by the way. But we have a post-FOMC decision segment coming on the 19th of September. That's going to be with Schwab's chief fixed income strategist, Kathy Jones. She, of course, part of the Schwab Center for Financial Research. And they're going to discuss that latest move by the Fed and what it could mean for the markets and the economy. Make sure you put that one on your list, everybody, on your calendar, again on September 19, 12 Eastern on the 19th. Okay. Now, Brent, let's move back after a hit of the Russell. We got to talk about the move in the semis, unfortunately, because this was the driver for the sell-off, essentially, right? We had the big move in NVIDIA, led by NVIDIA, and we took it all the way down to the 200-day moving average. We opened weekly today. So I'm sure there are many a trader out there hoping that what we've got is a little bit of that bear trappish type action right at what could very well be an area of support.
Yeah, I mean, I guess we're we're at least we're not continuing the sell-off right now on this is maybe the best I could say. It is yesterday was a huge down day, and again, not surprising. It's semiconductors tend to be big market movers here on that. So we'll see how that continues. I mean, it's not a robust bounce, I would say today at this point. In fact, right now, I guess we're down a little bit, but so I think the 200 days is a key level for us. We'll just have to see where we go from there.
Yeah, we will. Let's look while we're here. I wanted to look at NVIDIA briefly just to see if we could learn anything. And the only thing I can learn is that that short-term downtrend looks to remain in play here, Brent. Whether we like the downtrend line I've drawn in or not isn't all as relevant as the fact that we've made a now 2 consecutive series of lower highs. That stands out. And of course, the lower low back here. Brent, do we have any hope of bouncing in NVIDIA here from a technical perspective? Or is this more likely going to the 200-day moving average in the neighborhood of 90, 89, 90, somewhere in there?
Well, we certainly have hope. And it starts with sometimes sometimes we don't have sometimes it bounces. And it doesn't bounce at a 200. It doesn't bounce at a moving average. It doesn't bounce at a clear prior bounce. So you just got to look for the price action of that. Now, right. I would have more hope. I would have more confidence if we did have a nice level of support that between here and what our lows were at the beginning of August, which is almost in confluence with that 200-day moving average. That would be a little bit more of an assuring sign there on that. But we'll just have to see. Again, what can happen is you get some good economic data or something like that come out. That sometimes fundamental factors, macro factors, can affect the charts as well. And we're not, a lot of times in our classes, in our webcasts, we say, Schwab does not recommend technical analysis as the sole means of investment research. Well, there are other things that we can look at, and things like you can be looking at a stock and earnings comes out, and the earnings will completely change the character of the stock chart, even though there's no technical signals prior to that. Same thing is true on the broader scale of the market when we start talking about macroeconomic news that comes out. That certainly can affect the stock or the market, and to a certain extent, sometimes as NVIDIA goes, the market goes. Although we've seen exceptions to that. That can certainly affect it, even though we don't have a clear support level that we see.
It's true. Yeah, great reminder. Obviously, it's, as usual, putting a puzzle together, right? We have a lot of pieces, and we're just trying to see if we can get the actual picture to come out in the wash. Due to, after all we get to putting together all these pieces, so to speak. I think one of the other things I wanted to do this morning to try and give traders in the shorter term a little better understanding, maybe, of how things are looking today. Yesterday, as we looked at the S&P 500. There was no give back in yesterday's price action. And what I mean is we started sliding and there was limited bounce. And when I say limited bounce, the bounces we got came into that 20-period moving average. This is a moving average that is considered exponential. That's how I've assigned it, the 20-period exponential moving average on a 5-minute chart. And it's something that some traders keep an eye on to help understand directionality. And in conjunction with the pivot points on the chart, Brent, the fact that we didn't hold the pivot today at the open also stands out for some traders, and may very well mean, or imply at least, that the ledge there at 55.52 becomes major resistance, meaning we could rally into it and see that be the end of any upside momentum for the day. But alternatively, if we were to trade above the pivot with any conviction, I think we could very possibly bring short-term bulls back into this trade. And I'd venture to guess, Brent, that if we looked at the NDX and the RUT or the SOX, et cetera, it's going to have a similar approach.
I think you'd see a similar thing though. Those pivot points that Kevin has on the chart are typically used, not always, but kind of intraday, shorter term indicators. And you can look at the candle on the SPX or the NDX or whatever, and you may see on the daily chart that it's green, but that doesn't necessarily tell the whole story because we opened up lower, we're up a little bit, but not a lot from the opening price. Not a ton of conviction here at this point. Those would be key levels if we're truly going to see this as a bullish day. Then, I mean, the momentum is slowed on the downside. That's a good thing. But to truly call this a bullish day, we do start to need to break some of those levels that you're pointing out.
We do, no doubt about it. And I think if there was one takeaway that I would offer traders, it's kind of the importance of that first hour of trading, Brent. We talk all the time about how some traders just ignore the first hour. They don't like to trade it because it is volatile, difficult to get an understanding of the trend perhaps for the day. But in a scenario where you're selling down or rallying, and I mean making significant moves, that first hour matters. And if you're rallying with no give back in the first hour, traders tend to lean in and think, okay, that means we've got the possibility for an extended rally day. And of course, conversely, if you're selling off in the first hour, but getting no bounce at all, that takes you to above the, as this chart would indicate, above the 20 period exponential moving average, then maybe there's no opportunity on the long side that day. And so I want to just give you something to think about as you're trying to understand whether a day is going to give you opportunities on the long or on the opposite side of things, on the bearish side. So some good ways to think about this, Brent, and some of that action in the first hour can help to understand what might be coming a little later.
Yeah, and let me just point out something. Kevin was just talking about opportunities for the day. Notice that Kevin did not say, hey, look, that means the next 2 weeks are going to be bearish on the market here. We can use shorter term to try and help us with longer term, but just because we don't have a strong bounce today, one possibility that we could see is maybe today's a lackluster day and tomorrow's a lackluster day. It's kind of like what we saw when we were going up, and on the if you bring up the daily chart there, Kev, on the SPX, when we go up there, about a week ago, 10 days ago maybe, we started to see this weakening of momentum there, and it started to kind of peter out, and we're going, oh, this may be kind of a more of a bearish sign. Things may not be going on. If we can see kind of a similar type thing on the downside where, yeah, we're not continuing to drop, but we start to kind of go sideways several days in a row in kind of range, that actually, in this sense, in the context, would be kind of a good thing for the bulls, probably, in the sense that the downward momentum would not stop. So one day, Kevin was addressing kind of one day action and bleeding into maybe the next few days. But if we're looking for a turnaround in the market, sometimes you can look out a few days, and we won't know for a few days. But if you see that lessening of momentum, if you can see we kind of hold those moving averages right about the 50 and the 20-day for a few days, that could be a sign, the breather that we need, perhaps, to actually see a turnaround.
Yep. I like that point, Brent, because ultimately we got a big move yesterday, lots of selling. What we're hoping for is the momentum of that sell to exit the market, right? We want to see at least a new floor established. And you know what? We can say we stopped at one, at least as it relates to the SPX. Let's hope that we can hold that ledge for 2-3 closes even into Friday. That would give us some confidence. But of course, we have a big report on Friday. Data dependency from the Fed is going to give traders reasoning to act themselves when they see this data coming through in the next couple of days or in the next minute, for example.
Yes, yeah. So we'll see on the reports that come out. one other thing you can look at in terms of momentum is you can look at that RSI. We're right around the 50 level on that RSI, which can be kind of considered kind of a more of an important type level, perhaps. Can we hold in there or not? We'll see.
It would be nice if we did. That 50 line can present as support in a strong uptrend rather than having to get all the way down to the 30 line like we did with the major sell-off there early August. So if we could manage to hold in here, get a bounce and rally, that would be ideally what bulls are looking for. Remains a little dubious as to whether we can actually pull it off.
Yeah. No, I mean, all in all, it's not a great look on the market right now. I got to admit.
And there's the JOLTS report, and that's what I was fearful of, Brent. Now, hopefully that's just a one candle move, but evidently the reaction to JOLTS not what we were looking for, Brent. So that looks like now a rejection at short-term resistance and potential for continuation in this move, unfortunately.
Yes, I would agree. So that's kind of feeding into the narrative that we've been talking about today, and that is the economic data, weakening economic data. And here we had JOLTS came in a little bit. Let's see. Well, actually, I can't see the numbers right now, but
I'm going to look. Go ahead.
We'll see if what those numbers are. I thought I saw the numbers. If those numbers come in and show some weakening activity, not probably gonna hurt the markets here on that. So we'll see. This is just the first. This is a 5-minute candle we're looking at on this that red candle. So we're just seeing what the reaction is, and that can change.
And then I've got a headline here also stating that Atlanta Fed President Bostic suggesting that officials can't afford to wait for inflation to hit 2% before cutting. So that, again, providing a little bit of the idea, maybe, Brent, that the Fed needs to act. And if the Fed is and if the market believes the Fed needs to do anything, that by itself tells us something about the concern of the economic health here, perhaps. And that's not a positive, unfortunately, as it relates to what we might expect going forward here. So as you can see on a short-term basis, everybody, we need the S&P really to get back up above that 55.35 and ideally 55.52. Let's see if that, I'm sure we're getting a similar, if not identical reaction in the NDX, sure are. And then our Russell, yep, same thing. So we're seeing a lot of the same price action amongst the major indices. Can't say that I'm terribly surprised by it because it's one of the nice things we can take is that there's at least been some consistency amongst the major indices here, Brent.
Yeah. Yep. Absolutely.
Now let's peek quickly at that VIX. It had spiked a little off the open today. We had, as we bounced a little ahead of the JOLTS report, we were certainly looking at the VIX weakening, but keeping an eye on this can kind of give us a heads up maybe as we head towards Friday. We'll see how that plays out. Brent, when we look at our sector action here, the movement appears to be positive once again on the rate sensitive viewpoints here, Brent. Utilities and real estate right at the leading front here once more.
Yeah, so we'll see. Look at that. I mean, that is completely night and day different than what we've seen on the S&P 500 or the Nasdaq here. It's why? Well, it's these are interest rate sensitive sectors. Utilities certainly is, and a cutting of interest rates are going to tend to help utilities. Utilities tend to have number one, they tend to have a lot of debt payment, and so the lowering of rates reduces their financing costs. Also, a lot of investors will invest into utilities because of the dividend payment that utilities often have and generate. And if the competitive environment out there, in other words, the bond market, for example, is paying lower rates, it makes utilities seem more attractive in that regard. So you can see that in the chart there. Utilities is loving the interest rate trajectory that we're on right now.
Yeah, that 20 period simple moving average has been solid for utilities dating back to about the 11th of July. We've tested it briefly. Mind you, look at that, everybody. Our lows have still not even been below the 20 days. So that tells you there's some strength here going on nearly 2 full months with utilities rising like that. And then there's one other aspect here, Brent, that gives utilities apparently a little extra lift. And it's the knowledge that utilities are going to be absolutely imperative to providing the power needed to produce and utilize AI as we continue to talk the AI trade.
Yeah, that's kind of a lesser talked about aspect of utilities, but yeah, these our economy as we move to more AI, more tech, well, the utilities stand to benefit in that regard. So yeah, that's going to be a longer term, I guess, tailwind for the utility sector.
So the other one that's providing some leadership in the face of our selling here has been real estate. Again, reminding us that rate-sensitive groups, real estate in this case is the sector that is your real estate investment trusts far more often than anything else. And what I mean is not home builders. Remember, home builders fall under discretionary. And what we're taking away from this is, again, the lean in to finding yield, right? When traders, or rather when investors see yields in the risk-free rate of return, the treasuries, for example, falling, then what they look to is say, all right, I have to be willing to take on a little bit more risk if I want that extra yield, or if I want to get the yield that I was getting previously. And then they start looking at these yield paying or dividend interest bearing securities. And that's what we've got with both utilities and REITs here. The trend in the REITs is almost identical to that in utilities, Brent, just working strongly against the 20-day, although maybe about 2 weeks in advance of utilities, it looks like.
Yeah, and in some ways, we're getting back to a little bit more of a normal market in some sense, in that for a while there, we had a market where the equities just so dominated everything that it was hard to find any other competitive instruments out there in terms of, it seemed like tech was dominating. So all the returns were found in tech and some of these more, say, cyclical type sectors there. But with rates dropping, we have a little bit more normalcy in the market, where we start to see some of these sectors that have underperformed for a long time, to actually be more, I guess, viable in some investors' mindset, at least, as potential investments there. Now, that's not to say that this trend that we've seen in real estate and utilities is necessarily going to continue. Part of the market, of course, is it's not like what interest rates are doing, it's the expectation of what interest rates are doing. And that's true for everything economically, it seems like. It's not the thing itself, it's the expectation of what's going to happen. But the expectation right now is we have this path. We saw that when we were looking at FedWatch tool of through January, what kind of the market was pricing in terms of interest rates. If that's getting priced in, some of these interest rate sensitive assets, this is what we're seeing. But once that is fully priced in, once those expectations are fully, priced in, then you're likely to see the trends lighten up there on some of these sectors.
Yeah, I think that makes a lot of sense in terms of what we might be looking for moving forward here a little bit. There's a question about does utilities include green energy? I think that depends on what we're talking about. I think it could incorporate green energy into utilities, but I know for certain, though, Brent, that some of them, like solar, for example, those don't fall under utilities. Solar securities actually fall, believe it or not, in tech because of the high requirement for, of all things, semiconductors.
Yeah, certainly there's, something you may, if you go to, one thing I would suggest is check out on Schwab, if you go to schwab.com, there's a section that talks about investing themes. And so you may check that out. Just realize a theme doesn't mean that, you know, you're gonna, there's no guarantees on any of these things. But there's one that's like green energy, and you'll find when you look at these, they transcend one sector. They have elements in different sectors. And so, yes, in terms of utilities, in terms of green energy, utilities is one aspect of that, but it's not the entirety of it.
It's true. Certainly do a little digging. I love the idea of themes, by the way. That's a single page available in Schwab.com. Yeah. Remember, you can go straight to Schwab.com via the link here. You're already behind the firewall, so you can go ahead and do a little deeper research if you'd like. That's just an easy way of doing it.
And I've covered that in a separate webcast. I have a Get to Know Schwab.com webcast that I do. And a couple weeks ago, I did cover themes. So if anybody's interested, you can check that out. And there's a bunch of different themes. You know, there's a cancer research theme, for example. There's green energy theme. There's, you know, things like that.
Yep. Great reminder, especially if you're out there thinking, well, I'm thinking broadly, and this makes sense on a broad approach. That's exactly where the thematic approach might help you out to kind of pinpoint opportunity within that space. It's a nice page there on Schwab.com. I thought we could also, as some of you have noted, there's obviously been some leadership, but it's been defensive of late because we've seen technology taking it on the chin, and we've seen leadership from utilities and real estate, but also from healthcare, which has done quite well. Now, it seems like we are maybe consolidating at this upper range, but Brent, when I look at the various details below, volume, on-balance volume, RSI, there's nothing on the chart that suggests a weak viewpoint here in healthcare.
No, this is strong as well. And this one, I would say, maybe it's not as strong from the interest rate perspective, but just from a pure defensive sectors doing a little bit better lately aspect of things. This has been outperforming. So yeah, a lot of strength. When you see that RSI above the 70, it doesn't mean that it's going down, but what it does mean is the stock or whatever you're looking at has been pretty strong, because it can't get up above 70 unless it's been pretty strong of late.
It's true. And then Staples pushing higher as well. So it seems like there's been a concerted effort to take your opportunity for profits in tech and redeploy those profits into other areas. Another way we can look at that, of course, is with the quotes and using, for example, the S&P, the sector and indices. So I like to do this by coming into the public watch list and checking out sector indices, which is exclusive just the 11 sectors, one way of doing it. You can also incorporate industries if you're looking to dive a little deeper. But a quick look at just the 21-day relative strength will tell you, let me put it at the top here, that makes more sense. There's our discretionary at the top over 21 days, but things have shifted. This has not been as great a return, believe it or not, regardless of how it looks over 21 days because of what's occurred in the last, say, week plus, as we've kind of lost momentum.
Yeah, reminder, just look at different time frames there on these, and you can look at the chart. I mean, I think charts are great because they give you humans are very visual for the most part, and seeing the charts and seeing trends is very helpful on that.
I agree. Let's, as we are getting towards the close, I know a lot of you are commenting, hey, look, we saw NVIDIA go green. We saw the SPX go green. Let's just look at a couple of these on very short-term charts and see if we can learn anything. You know, we are still below on NVIDIA, below the purple line, below the pivot point, our equilibrium price, right? The level above which we would feel optimistic and potentially bullish for the day. So it stands out that we have come off of our low. That's a positive, but we really, at this point, can't say we've got anything more to work with just yet until we maybe take out that pivot point. If you're a shorter term trader, we could probably say the same thing about the SPX, Brent. I mean, that move to the downside initially following Jolt seemed severe, and yet we bounced back. But boy, it stands out to a short-term trader that that ledge has not been busted. And you know what? That might need 2-3 consecutive 5-minute bars above it to validate it. But right now it looks like a rejection zone, doesn't it?
Yeah, that's a potential resistance, if you will, intraday. We'll see. And so short term, it's look, the market, look, SPX for the day is basically break even. I think NDX is similar on that. And so it's slowing the momentum on the downside, but it is, I guess, better than continuing yesterday's sell-off at this point.
That's that much is true, Brent. I want to answer one final question before we wrap it up. It's for Ramaswamy asking about how do you look at the companies in these indices? Well, if it's a sector relationship, you can do it very easily via the Market Watch and quotes by just dropping into what is the by industry breakdown here. So these are the sectors of the U.S. market. If you want to look at all energy, or if you want to break it out into the sub-industries, you can do so this way. So just kind of picking your sector and then digging in deeper. Maybe you want to look exclusively in biotech, for example. You can do so right here. This is an easy way for you to find exactly what you're looking for on an industry, sub-industry basis. I hope that was helpful for you all. So Brent, as usual, I want to thank you. I mean, what an excellent discussion today. We covered so many topics, but I know our viewers got a lot from it. So thanks for being here as always.
Thanks, Kevin. It's a fun day in the market. Keep your eyes open, everybody.
That's right. Always a fun day in the market. It's even more fun when we get action and volatility. That's what a lot of traders are looking for, at least. So big thanks to Ben Watson in the chat, and a huge thanks to all of you for being here and participating in the show. Of course, we love having you, love hearing from you. Thanks for being here. Thanks for participating. Follow the three of us on X, and make sure you subscribe to the Schwab YouTube coaching channel. Lastly, if you like the conversation today, please hit that thumbs up for us. It will really help us out in terms of the algorithm within YouTube here. So appreciate you, everybody. Have a great rest of your Wednesday. We'll see you again real soon.